Well, I think that this is certainly market-driven. I think the market is waking up to the fact that the first blows of this trade war that will draw blood will very likely take place this Friday. And the market is very quickly looking past the first round of tariffs to try to price the end game of a multi-stage tit-for-tat retaliation between the two countries. This is not something that's easy for the market to do. This is not something that the market can do accurately. China in particular is quite at risk. Now, it is already juggling fairly intricate challenges of a slowing economy, of deleveraging the credit bubble, and these trade issues could be the proverbial last straw on the camel's back. I think the good news is, as we've seen, the Chinese government has at its disposal a wide range of measures that it can undertake to calibrate its exchange rate, for instance, and to, as we've seen over the Triple R cut, in the Triple R cut over the last week, that it can support its economy if the need arises.
Eli, you mentioned pricing the end game. I think it's really interesting if you take a step back and you look at this not just in terms of the trade and the economics, but also the economic diplomacy that's going into all of these decisions coming out of Washington. Give us your sense of where this is headed.
Sure. Now, I think with this White House, one never really knows. I think what is clear is that the White House is the aggressor in this trade situation. It holds the initiative in this situation. And really the issue is how far does it want to go down this path of escalation? To us, what is concerning is that the narrative of this trade war has changed from what was initially the US trade deficit and unfair trade to what is now national security issues. And also, I think, US aggression against Chinese economic and technological ambitions. Now, I think this is worrying because the twin features of one, the US trade deficit, and two, the US discomfort against Chinese ambitions could be persistent features of the investment backdrop for a while, and therefore these tensions could stay with us for a while.
Eli, that being said, everyone's trying to figure out how this ends, and I wonder if the question is too often asked as who has more to lose. If we should really be asking who has the higher pain tolerance here, because you already mentioned what happened with the PBOC, the Triple R cut. It seems to me that China has more ability, more tools, if you will, when it comes to putting pressure on the central bank than you would see in Washington. So that being said, do you think China perhaps does have a higher pain threshold?
Well, absolutely. I think, with President Xi Jinping in power, he doesn't face the election over the near term. And he, in fact, I think in terms of the power consolidation situation in China, is in a stronger position. This is classic game theory here, Nancy. So I think that over the long term, what is good about the situation here is that China does have the ability to inflict pain on the US as well, specifically, for instance, by targeting the US farmers, which form an important component of Trump's support base. And also, let's not forget that the market has the power to impose discipline on both countries as well by punishing asset prices. We've already seen that so far, and that will likely stop both parties from going too far down this road.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.